Apologies. Last week I didn't have a session. I think I traveled. I do a lot of traveling recently, so some days I'm not around or at my house. So yeah, apologize for that. So today I just want to start off by saying welcome, and if you have any trades you want me to look at, please post that in the chat. I will get to that. Or if you have anything you want me to first talk about, put it in the chat and I'll get to that, and we'll use that to kickstart. If not, you know the drill. It's the regular procedure, looking through the seasonality, COT reports, and probability. If you're new, welcome. This might look all strange to you. Just bear with me.
Good evening, Mr. Deji.
Good evening. How you doing, sir?
I'm doing fine.
Beautiful.
Welcome back. Please,
Thank you.
on our last webinar, there's something I pointed out, but when I pointed it out, it was already late. There's something we are looking at. Like I made mention that most of the times we might use our candle week to ascertain the pull levels. Now, most of the time, it might not reach at the particular price level or the price ranges that we analyze, and the market will move towards the direction that we've analyzed. So you said that you are going to show us a way to handle that, because most of the trade we align, but they might not reach at that exact level that we are waiting for a pullback, so that we might start going short or long. So you made mention that you are going to give us some strategies on how to handle that issue. So I just want to remind you.
Okay. I'll touch on that today. My trail of thought, I think 2 weeks ago, I can't really remember specifics, but I remember you talking about that. I can't remember exactly what I wanted to show you, but I'm guessing it's going to still be exactly the same thing I'm going to show you now. So I'll get to that. I think what we'll do is when we do the analysis, and then we'll just pick we'll pick one of the trades and then use that as an example. I hope that'll be fine. So we got a request for Euro AUD. So I'm going to do Euro AUD separately. Go CHF. Okay. Yeah, this is quite a few pairs to look into. Okay. And then GBP. Yeah. So I think this is a good start. Now, I mean, everybody's written down, in pairs. I like to analyze them individually, just to get a little bit of leveling down into it. So I'm going to look at them individually, then we can then look at them in pairs. Okay. So let's get started. Now, for the people that are new, the first thing you have to understand is, for the fundamental aspect, there's 3 strategies. So strategy 1 is COT report. So COT report is basically checking what commercials and non-commercials are doing and position ourselves with commercials. Now, you might ask, who are the commercials and who are the non-commercials? Non-commercials are retail traders, some banks, some, equity funds and all of that stuff. Those are mainly people that try to profit off of the market. People looking to profit off the market, speculate in the market like you and I, are mostly fall under the non-commercial. Now, the commercials are people that use their, the specific assets for their daily businesses. So, for example, now let's use corn for an example. Some people just, want to buy corn. Why some people want to trade corn? So if you're a business, if you want to buy corn from another country, you need their finances, you need their local currency to buy that, right? So you just want to exchange your money at the best rate to buy the corn you want to buy. Now, we, for example, just want to make money off of that, the fluctuation of prices between the 2 countries. So if you're buying corn from Mexico, for example, and you're spending GBP, for example, so you're going to change that, you're going to look at the GBP economy, the UK economy versus the Mexican economy to make money. So if I've confused anybody there, I would show you an example in a second. So basically, we align ourselves with people that are not looking to make money from the market because they need it for business, their business proceedings. And those guys basically have inside information. Someone just drew on my screen, please. Yeah, thank you very much. So those guys are the people that we want to align ourselves with. Now, the second strategy is called seasonality. So seasonality basically means, there's seasons in every market. I mean, you can easily decipher that by having Q1, Q2, Q3, Q4. So the 4 quarters in the financial industry. Now, it's just like, here in UK, we have spring, autumn, summer, and winter. People in Nigeria, I can't remember. I think there's rainy season and there's sunny season or dry season. I'm not sure. But so basically what we want to do is we want to piggyback off of those seasons, because certain seasons, the market tend to move in specific directions. And that's what seasonality does. So if we align ourselves, if we, for example, see, okay, the people in COT, the commercials are literally going in a specific direction, and then it's the season also is aligning with that direction, you stand a better chance of winning that trade. And then lastly, we have probability, which is a tool that was designed to basically show us the percentages of win at specific days, because the market is like a big casino, right? Now, the casino only has maybe 51, 52, 53% chance over you playing against it. Now, what we want to do is we want to align ourselves with the days that we have slightly above 50%. So if we have 51%, 52%, 53, even up to 60, 70%, it means that it's going to most likely be in our favor to trade. So we're only going to trade on days that align in our favor. So those are the three tools that we're using. Apologies, I might be a little bit slow. I don't know what I got last night, but I'm feeling slightly woozy today. So moving on, let's check the COT first. So from the assets we've selected, we have AUD, we got gold. Let me just open gold. I think AUD and GBP is also on that list. I think NZD is on that list as well. We don't have Euro, JPY, CHF. USD. So HF, Y, and then
hello, boss. We can't hear you. We can't hear what you're saying.
yeah, can you hear me now? Apologies. Yeah, I'm being disconnected. So, okay. Yeah. Thank you for.
We still can't hear you.
You can't hear me now. What about now?
Yes,
you should be able to hear me
we
now.
can hear you now.
Yeah, I can see it.
Yeah.
I don't know how to get a new driver for this damn thing. I don't want to change it because it's good for what I use it for. Only acts up with Zoom. So, yeah. So the thing here now is USD. What we want to look at, as I spoke about previously, is commercials, right? We just want to check the commercials and what they're doing. And the COT report lags a week behind. It's not real time, but it still gave us a good clue of what's going on. So with the USD, for example, I'm going to put USD right here. I'm going to put that short, right? Because they're going down. So short means sell, long means buy, basically. All we want to look at is the commercials and what they're doing. If they're adding new position or they're taking away. In situations when both of them are green, you have to be very careful. But if one side is green and the other is red, just focus on the green and just take that. That's the only information we need from here. So the next thing, let's see which one is the next one there. Let's see what we got. Let's see, just get this all to load as well. So the next one is JPY. We got 7,000 new positions coming in. So JPY also. JPY will go long. All right. So let's see what's the next one. So we'll go next. Taking this time to load, but just give it a time. So next one is CHF. CHF. Okay, beautiful. Now we have this one pointing long and this one pointing short. Ideally, we'll take the long, but what I'm gonna do is I'm gonna start that because it's also could go short. So, but you know, seasonality will help us decipher what direction to go with that. Then let's see what we have next. So next is NZD. We have that also going long. This position is quite small, but not negligible, but you still have to start that. NZD go long. And we'll start short as well. All right. See what we got next. And to be quite frank, the strategy is quite simple. It's just following exactly what you're seeing on your screen. Next thing is GBP. Also goes long. Start short. These are looking like risky trades for me because this is actually heavy position, 8,000 position versus that. UK is actually unstable at the moment because Prime Minister is going out the door. Yeah. So next one is AUD. Not short. Start that, but yeah, also have long. On a normal situation, we don't really have them that much, but in this situation, it seems like we have both long and short simultaneously. So, and gold, we have a little bit long. They've taken our positions from their short, so. Long. All right. So, if I'm not mistaken, those are all the assets. The next thing to look at, I'm going to close COT. I don't need that anymore. The next thing to look at is the seasonality. So, let's start off with USD seasonality. Let's see what it has to offer. So as I said, seasonality basically just focus on the seasons, you know, and this is the entire 38-year seasonality. So we look at when all three aligns, the 5 years, 15 years, and the 38 years, and then we use that to decipher what direction we want to go to. So currently right now, we're on the 4th of September. Yeah. So we're somewhere around here. Tomorrow is going to be somewhere around here. The market is most likely going to take a dive to about the 7th. Now, I don't like short-term trades. I don't really believe in short-term trades like that because it's so much stress. But for this occasion, you know, 5th, tomorrow, 6th, 7th, we have 2 days of short. So ideally, I like 3 days. So now, pointing back at what I said before with the COT report, you can see the COT saying short and also seasonality saying short. So two of the strategies are telling you USD is going to lose strength, and this is going to lose strength from the 5th till the 7th, right? Those just 7th. That's just 2 days, right? I don't really like that. I like it to be longer, but for this occasion, we leave that like that. Next thing we check is JPY. Now you might wonder, why am I just checking individuals? It's all going to make sense in a moment. Once we kick the probability in, it will make sense, I promise. So JPY, around here, right? So we got that long from the 3rd, 5th tomorrow. So it looks like it's actually going to short, but it's going to short from like 7th. So JPY giving us long, but we're seeing that short from the 7th right here. It doesn't really look encouraging. You know, so for that reason, I'm not going to touch JPY. I'm going to delete that. Apologies. And the next one is CHF. So we're right here. If I zoom in a little bit, CHF we're right here. And CHF is most likely going to consolidate throughout this entire week and then possibly take off on the 12th. And so for that reason, I'm not going to touch that as well because it does look like consolidation. Now, the trick with trading is picking the right trades. You know, it's not always you have to trade every single time. You just have to pick the right ones. Now, the next thing we look at is NZD, of that both long and short. So NZD, we have that long move happening from here to about the 8th, right? Maximum 8. So, and then we have a short move that most likely going to happen after NZD. Long. Right, so I just want to reconfirm what I looked at. Yeah, so 5th, so 8th. And then the short might kick in, but it will most likely kick in next week. So from the 12th, so we don't really need that. Next thing is GBP. Now GBP, we see a massive swing in both directions. Now, because the geopolitical aspect of GBP is unstable at the moment, so it's literally a high risk trade automatically. But then sometimes when you have high risk, there's higher reward. But if you're new to the game and you're not really sure of yourself, I would just recommend sitting them out, watch what happens, and then make a decision later. So GBP, we see from the 7th of September, it's most likely going to go long because all 3 years align. So I'm looking at, basically, let me zoom in so I explain what I'm looking at properly. So I'm looking here. You can see right here, all 3 assets seems to be pointing to going up until the 12th. So all the way from the 7th right here to the 12th, we have that long move. Now, you know, we have that long and short simultaneously. So both sides of the table are fighting each other. And basically, the long has the highest alignment for us anyway, and they have the highest position. So, you know, I'll put that there, but it's risky from 7th, I think, to 12. We'll just re-verify one more time. So 7's correct. Yeah, 12 correct. So next thing we look at is AUD. All right. Let's see what we got AUD. Then we have gold. For short or long. Oh wow. So with AUD, it kind of looks similar. So I think NZD, like, yeah. So it's gonna go long from the 5th up until the 8th. All right. So that's that. But keep in mind all of these stuff, because you have people pointing at the other direction as well, makes it more a higher risk trade rather than having those low risk trade, for example. You know, I have those low risk trade, they're much better than the higher risk trade. Now, the next thing is on the 9th of September. Well, that's what we have now. 4th of September, apologies, for gold. Now, with gold, gold's meant to see a fall from here, from 4th, maybe 5th, up until the 12th. And because gold is saying long right here, we take that out of the equation. So we're not going to trade that, which means we're left with just these 4 assets, right? Now, when I said, I promise you it's going to make sense, this is where it makes sense. Now, we know USD is going to go short from 5th to 7th, right? Just 2 days straight. So what happens is I'm gonna cross-check everything, all the pairs, all the USD pairs, right? And I'm gonna look for the one that aligns with what I have so far. Now, if I find that alignment, that will be the trade I take. If I don't find an alignment, I'll let it go. So let me explain. So currently right now, we want USD to go short from the 5th, right, of September. So if we go to September, for example, right here, and we look at the 5th of September, if USD is going short, right, so the 7th, we should have a higher percentage looking down here. So basically I have buy and sell. So we're looking for to sell, USD, and USD doesn't look like it's going to lose strength from this period to this period. So USD CHF, I'm not trading that. Next thing is USD JPY. Same procedure apply. Look September. So we have short on the 5th, but then 6th we have pullback, then 7th we have short. Now I don't like when the trades are swinging up, down, up, down. I don't like that. For that reason, I'm not going to trade that. I want 3 days straight in my, in my column. Remember when I said it's like a casino, right? You have like 51% chance, 52%. On this day, I have 54%, but immediately after, I might lose on this day. So I don't want that. I don't want to trade that. I'll be in profit today. Next day, I'm out of profit. And then I'll have to bite my fingers to make sure the next day becomes in profit. I want all those days to be in my favor. And this is how you just, cherry pick trades, because if you see that it's not in alignment for you, just let it go, let it be. You're going to find a day that your trades will be in alignment, excuse me. So that's what you want to do. So with Euro USD, for example, that USD is losing strength, so Euro is meant to gain strength. Now we have Euro gaining strength on the 5th, we're losing and gaining again. We don't want that neither. And the next one, we go to USD CAD. So USD is meant to lose strength on 5th, 6th, and 7th. And there we go. We have 3 days straight losing strength. So our first trade is USD CAD. Now we have short from 5th till 7th. Right. Now, ideally, this should be classified as a medium risk trade. Then again, what's it called? I remember something now, it skipped my mind. I wanted to classify as a high risk. Yeah, I remember now. I want to classify as a higher risk trade because it's just a 3-day trade. Now, when you look at the seasonality, I like the trade to last the entire week, but because it's just 3 days, for example, because I like the bigger chunk, I classify as a higher risk because the reward is lower. Then again, this could also be a middle, a middle risk. But for the new guys, people are starting off, I want you to keep in mind USD's, USD CAD is going short, but keep in mind it's a high risk trade because it's not a long-term trade. It's a very short-term trade. The shorter the trade, the higher the risk. A lot of people think that, oh, because I can go into the market now, 5 minutes I'm out, that I'm making money. It's very, the risk is low. The truth is, the shorter your trade, the longer, the more exposure you have. The longer your trade, the less exposure you have. That's how the game goes. It's very difficult to understand that initially, but that's literally how the game goes. You have to be able to stay in the trade for a long term because that's where you make a lot of profit. Because over time, if you trade in small batches and you start losing and losing and losing and losing and losing, and you eventually win, for example, and you're taking small profits off the table, it's not going to cover for your loss. But if you're trading on a longer time frame, you're trading bigger moves, when you take a win, it's going to be a very massive win. But when you take a loss, you probably cut your loss a day or two into the trade anyway. So your losses are shorter than your wins. So something to think about. Next thing to look at is GBP USD. So let's look for GBP USD. Now we have GBP going long on this day because USD is losing strength, so GBP should win. But 2 days later, the 2 days after that, GBP is losing strength, so we're not touching that. Next thing is NZD USD. And NZD USD, We have NZD also gaining strength while USD is losing strength, and we actually have that straight flush for an entire week. So NZD USD should go long. So still the same thing, 5 to 7. Just because I have 8, 9 also pointing in my direction doesn't mean I should continue on that, because my seasonality doesn't support that. Now, if you look at NZD seasonality, for example, and these 2 days it's meant to gain strength as well, then you might be in a good position to buy that, keeping in mind that NZD is also saying long. So if you want to trade this for the entire week, you just have to look at the NZD seasonality and see, for example, if it has long move, maybe up until the 13th or something. And if it does, then that's a good trade for you to hold up until the 13th. But we don't have time to show all of that. I always like to keep the session in 40 minutes. So the next thing to look at here is AUD USD. All right. So AUD USD is the next one. And AUD USD, we have that also going long, 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 long. We have the entire week as well. Same principle applies to AUD USD as the one I just said with the NZD as well. So AUD USD. Oh. So same thing applies to this asset. Now, because of time's sake, I wouldn't be able to go through the NZD one, the GBP one, and the AUD one. But if you want to go through it, I'll post a link that you can actually, analyze all of this yourself. Just the same exact thing I'm doing here. Now, to solve what Mr. Uzo said, I would go back to, let's pick one of these. Let's say USD CAD. Let me see now. Does anyone want me to analyze USD CAD? No. USD JPY has been analyzed. We can't trade USD JPY. AUD USD, okay, is one of the ones I've spoken about. So I can analyze AUD USD right now for you. So let's look at AUD USD. So AUD USD, we know we want to go long from the 5th till the 7th, right? Now, what Mr. Uzo was talking about initially is here. Candlewick display. Yeah. So what he was talking about is here. This is what I was talking about. So there's this. So some people might have seen this before, especially if you attend this. And if you haven't seen this before, I will quickly explain it. So what you want to do is calculate the wick size. You see this tails right here, this tails right here. You want to calculate it. If you're going long, for example, you want to calculate the down wick. And if you're going short, for example, you want to calculate the up wick. And you want to take an average over a certain period of time and then divide that. And that will tell you how far back you expect the trade to pull back before you decide to go into the trade. Okay, I hope that explains what I'm about to do next. And if you don't understand, please just post in the chat box and I'll be able to explain that. So because we're going long on AUD USD, for example, and we're going in, I think, from tomorrow. So what we do is calculate the previous 5 candles that went long. So this one, this, and this, right? And we'll divide that by the amount of candle, which is 1, 2, 3, 4, 5. You can do 6 if you want. You can do 10 if you want. I just do 5, 5 represents a week for me. So I'll do 7 plus 40 plus 6 plus 20 plus I think 2. So that gives me 75. And then if I divide that by 5, that would give me 15 pips, right? So I don't need to look at this market at all unless market pulls back 15 pips, right? So if you pull back until the market pulls back to somewhere around here, that's the only time I'm going to look into this market. If it doesn't do that, I won't even check this market out. Okay, that's what he's done. So you can do the calculation: 7 plus 40 plus 6 plus 20 plus 2, and then you get 75 divided by 5, give you 15. Now, let's say 15 pips is somewhere around here. What you can do is you can set an alert, right? And I always do tell Muftat, thank you for this, for showing me this. I didn't even know this existed. You can set an alert there, wherever 15 pips is. This is 19 pips, so I can move it up right here, 15 pips, right? And until price pulls into that zone, I do not care what price is doing. Okay. Now there's certain scenarios, for example, in which price does not get to this zone. Now this is where you get a little bit more creative, right? So I can do this support and resistance, right? And also I haven't even done one thing. I normally do something here, which I haven't done. William spread is not shown here because William actually shows me what happens in the trade before it happens. Yeah, so William is slightly pointing up, saying the price is going to go up. So for example, when Williams was pointing up at this point, price started going up. When it was pointing down at this point, market dropped, point a little bit of up, price gained a little bit of action. This down just did a little bit of consolidation. But what you use William for basically is you will see it if you have this alignment, for example, and then you have the alignment of William, let's say pointing up in this situation, and we're going buy, then you buy. If you have an alignment pointing down and you have your William pointing up, the trade becomes, you bump it up one more level to become a little bit more risky. But I don't have enough time to explain Williams in depth. I'll probably do that in the next session. So what we have here is we have this zone for the entry. If price doesn't get here, I'm not going into the market. Now, the next thing I can say is what if price doesn't get there, which is what Mr. Oza was saying. What you can then do is get your support and resistance. Any support and resistance will work, and go to a lower time frame, right? You want to highlight a zone for yourself. You want to go to a lower time frame, then highlight a zone. Now, keep in mind, this is where I wanted to go into the market, right? Based on the average wick candle. And now support and resistance is giving me this zone right here, that there's a massive support there. So what I do is I highlight this zone right here, So rather than having, 15 pips to wait for the market, I can now go into the market from, let's say, 7 pips down. Does that make sense? AUD. I mean, at the end of the day, it's still high risk anyway. That's why I put it right there. But what's most likely going to happen is you have 3 days. People that have gone in here and here hasn't been rated yet, right? People that went in here have been rated. So it tried to rate people here, but it didn't complete the rate. So it's most likely going to complete the rate anyway. And if you look at it, there's a pocket of liquidity right here. That's what market sought after, and market is filling that out right now. So most likely what you're going to see is market runs back to the next pocket of liquidity, which is right here, right around here. So when he runs back into that pocket of liquidity, that's what we're literally trying to make profit off right now. As I said, I don't enjoy taking the short-term trades, so it's something to think about. So going back to what I was saying with Mr. Uzo. So if you know your trade was right here, for example, that's where your 15 pips entry is, and your support and resistance is already giving you, a support line somewhere around here. What you do is then draw the zone. So you don't need to watch the market until price gets to this zone. So what you can then do here is set another alert, right? And put that alert right there. So now I can delete this zone and I can delete my indicator, just to keep my chart clean. I can delete my indicator and then go in at this zone. Now, what else I can do is I can go with this. I like this setup a lot because it's just my 3 EMA 20, 50, and 200. And what I can then do is watch my EMA, what my EMA is doing. So if price, for example, comes into this zone and then price ends up above the 20 EMA or above the 50 EMA, I can then trade it if if price doesn't get down here, just as an extra confirmation. So if price does not get down here and hits here and started running back up, I just wait for it to close above the 50 EMA and I go in. Most likely when price closes above that, it would retrace back to that zone and then just buy it in. Okay, so that would be a way that I'll approach it. I want to keep it as simple and straightforward as possible. Okay, so what you need to do in this scenario, for example, is you already know you don't want to look at the market until it gets here, but your support and resistance tell you that you should wait for price to get here. So now what I do is I wait for price to get here. Now, lastly, what I need to do is you always have to stay safe. Note what is called average true range and look at on the 4 hours, it's telling you 34 pips. So your stop loss is going to be 34 pips times 1.5 times 34. Now, that's 51 pips stop loss, right? Now, if you're waiting for price to hit here first, and then you set your stop loss at 51 pips somewhere way down here, somewhere way down here, the likelihood of getting raided is almost next to none. Market would find it very difficult to pull all the way down here to raid you, you know. So even if you don't get your entry right, let's say you got here and price still decide to pull further, you wait to that 51 pips. It would be very difficult for price to get there. And before it gets there, you can cut your losses short. But if price doesn't get there, you take your first profit at 34 pips. Then your second profit at 51 pips, and your third one, let it ride to the end of, you know, the trade, which is the 7th. Okay. So that's how you approach it, Mr. Oza. So I hope that sorts it out. This is all I have time for to analyze today for you guys, but there's more trades. So if you want to learn how, you know, or analyze more of this trade, I'll post the links into Telegram, and then you can grab the links there. You can go directly to the website, business.dmempire.co.uk/pricing to get access to these tools. They're all online for you to use. Okay. So thank you guys for attending this session, and it's been beautiful being here with you. Have a lovely trading weekend. God bless you all. Take care.